When Jessica Patterson became a single mom of 3 young kids, she knew she couldn't make it work without buying a car.
My whole life depended on it. It was going in and getting a car or not be able to take my kids to the medical appointments and services that my special needs child needed.
So she headed to this used car lot outside Kansas City where a saleswoman pointed her to a Kia Rio priced at $15,000. With a $12 an hour job as a receptionist and no savings, Patterson knew she'd need a loan.
She put my information in this little computer. It was like bloop, 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 and then Exeter came and flashed across the screen.
Exeter.
Exeter
Finance, based in Texas, is one of the largest auto lenders in the nation, specializing in subprime loans designed for customers with poor credit. We're here to help, it says on the company's website. But that help, we learned, can come at a steep price. Our joint investigation with ProPublica found that Exeter borrowers, already struggling financially, often say they are surprised to learn they owe thousands of dollars more than they anticipated at the end of their loan. Those extra charges are a moneymaker for Exeter, but drive borrowers deeper into debt. That's what happened to Patterson. She bought her Kia in 2017 with a sky-high interest rate of 25%, financed by Exeter. The company charges the highest interest rates of any auto lender in the country, listed in publicly available data reviewed by ProPublica.
I was just like, holy bejeez, I don't know if I can do this, but I need the car.
Patterson soon fell behind on payments. When she called Exeter, a representative offered her what seemed to be a lifeline, a loan modification known as an extension, which would give her a short-term break from having to make any payments. She said she agreed on the spot. What did you know about what an extension would mean?
No knowledge. That rep did not explain to me what the extension meant. They just said it was no problem. We could take care of it. Let us put the payment toward the end of the loan term for you. And I said, really, it's that easy? And they're like, yeah, it's that easy.
3 former Exeter employees told us the company was quick to hand out extensions like these to struggling borrowers.
I wanted to walk away.
Claire Groves was one of the representatives on the other end of the line during calls with people like Jessica Patterson beginning in 2019. She says even though they explained interest charges would continue to add up with an extension, they did not spell out the actual cost.
There was a spiel we had to give every time we gave an extension. You understand that this is what it would do.
Was that an accurate way to describe what an extension was?
No, not in the sense of the long-term effects.
What was it not saying?
It wasn't saying that there was the potential of thousands of dollars being due at the end of the loan.
The extension simply pushed payments down the road, she told us, but consumers would still have to pay every bit of the loan, plus extra interest. She said extensions were one way she and her colleagues could earn bonuses by keeping loans from heading toward default, a claim Exeter denies. The company declined our request for an on-camera interview. But in a statement, Exeter wrote it has no reason to mislead customers and that its extension process, which includes the scripts read by agents like Claire Groves, has evolved since 2019, partly because of continuing guidance from regulators. But when we brought our questions to the top lending regulator in the nation, the Consumer Financial Protection Bureau, or CFPB, the agency would not say whether Exeter's extension practices align with its guidance.
What I can say is the CFPB doesn't give like a seal of approval, right? So that's not something that the CFPB generally does.
Chris Kukla is Senior Program Manager for Auto Finance at the CFPB. He says extensions can be a good thing for consumers when done right.
We do need accommodations for borrowers who are facing a short-term financial emergency or a change in their circumstances. But we're going to pay close attention to what the terms of those accommodations or modifications or extensions look like and make sure that consumers are being treated fairly.
But a large number of delinquencies can be a sign that they're not. ProPublica's analysis found that more than half of Exeter's subprime borrowers are 3 or more payments behind schedule. No other lender in the data comes close to that degree of delinquency. Is it alarming to you that more than half of a company's borrowers are on the verge of default?
So I can't comment on the specifics of a particular lender's practices.
Generally speaking, is it alarming that you would have the majority of any lender's borrowers on the verge of default?
So we pay close attention to key metrics in the market. Certainly, borrowers falling behind, delinquency rates are one. Default rates are another, right? So if consumers are starting to get into trouble in what is by and large a relatively strong economy, if we start to see borrowers starting to fall behind, we pay attention.
When we repeatedly pressed him about whether his agency was paying specific attention to Exeter, he wouldn't say.
I can't tell you whether or not we are investigating or not investigating in a company. I can't tell you whether we are actively supervising or not supervising an entity. That doesn't mean that we're not paying attention to something.
After just 6 months at Exeter, Claire Groves quit her job in 2020, but told us she's still haunted by some of her calls with clients who had taken extensions. How would people react when you would tell them, surprise, you owe thousands of dollars still?
Extremely upset. I mean, we had a suicide clause. Like, we had a whole procedure because people would be like, I'm just going to go kill myself.
People would say they were going to harm themselves. Did Exeter understand that?
I think so. I mean, why would they have a suicide procedure if they didn't?
You eventually left Exeter.
Yes.
Why?
I was crying every single day I logged in. I couldn't handle it anymore.
Exeter declined to comment on Grove's claim about suicide protocols.
This is a long list of payments you had made to Exeter.
In the 4 years after she took out her loan, Jessica Patterson received 5 extensions, but still owed more than $12,000. Her fiancé at the time figured out she had already paid Exeter more than the sticker price of the car, and still wasn't close to being done.
You had given Exeter a lot of money at this point. More money than maybe the car had even been worth.
And that's exactly what we figured too.
So she decided to let the company repossess her Kia without a fight. She reported her experiences with Exeter to the Kansas Attorney General, saying they are a predatory company. This company not only destroyed my credit, but gave me a loan I couldn't afford.
Right there.
Patterson's fiancé is now her husband, and she has a new career as a real estate agent.
1, 2, 3.
Together, she told us they're working every day to dig themselves out of debt, but can now afford 2 vehicles with the help of a different lender.
The Kansas Attorney General declined to take action against Exeter after Patterson was in touch with them, but there were about 200 other complaints similar to hers made to attorneys general across the country. Exeter tells us borrowers can ask to hear what their extension will cost, but Patterson does not recall being given that option. Patrick Terpstra, Scripps News, Washington.